Well, let's get straight into the stock markets. About $3 trillion US, about 5 billion Aussie, was wiped off Wall Street overnight, which caused the ASX 200. It fell 1.8% at the open today. It did fight back. It was down 1.5% at midday. Then it dropped again. Supermarkets were the top performers for a second day in a row. Everything else got smashed, especially energy stocks. The market finished the day down 2.44%. It's in correction territory. Here's the performance for the week. It wasn't pretty. Energy stocks down 12%. Mining companies down roughly 8%. Market finished the week down almost 4%. The supermarkets were the best performers today. Just like gold, they're a classic defensive stock, so Woolies, Coles and the IGA supplier Metcash were higher. Protective gloves maker Ansell was sold off heavily yesterday due to Trump's tariffs, but today it said it'll simply increase their prices in the US, so the market loved that one. And the gold sector lifted too. Gold Road was the best performer. Car parts maker Emotive got absolutely crunched due to the tariffs. Kitchen appliance maker Breville was down too. Remember, it makes most of its products in China. Metal recycling business Sims was sold off sharply. So was the buy now, pay later company Zip. And oil prices down about 6% overnight. The whole energy sector was lower, led by Santos. So for some immediate reaction to the market's upheaval, I spoke to Grace Sue from Clearbridge.
I think there is quite a bit of uncertainty right now for investors, both in whether or not the current policies will stand, because it sounds like things can and will be negotiated, but also how they will ripple through the economies, the supply chains, and global terms of trade. So I think right now everyone is trying to process the information, but it sounds like we are set for a phase in which economic growth will see headwinds and inflation will certainly be higher than prior expectations.
And how long could this period of uncertainty potentially go for? Are we talking months here, or is it longer than that?
I think it could be much longer than that. There's phases of what the Trump administration is trying to accomplish. I think very near term, they'll try to get wins in their pocket. So the negotiations on reciprocal tariffs, I think, and also things like the resolution of the TikTok sale, things that they're negotiating right now should be the first phase of what will be negotiated. And then beyond that, he's looking for things that are much more long term in terms of investments, reshoring CapEx to the U.S. He's talking about foreign investment in everything from immigration to raw materials, things like that. So those things are longer in nature in terms of the deployment of capital and the commitment to setting up companies and locations inside the U.S. And I think that could be a multi-year cycle. And so we have phases that we'll go through. Hopefully we get more certainty through each phase as it plays out. But certainly right now we're at the peak of it because markets hate uncertainty. And right now, every variable is pretty much in flux.
Yeah, we saw some big falls not only on Wall Street last night, but we've seen some big falls in Asian markets as well yesterday and today too. How do you expect that China and Korea and Japan might potentially respond to America and these new tariffs that they're putting in place?
Yeah, I think there's twofold. There is the external, how you deal with the U.S. So in the relations to everything from the tariffs that they're currently implementing on goods that are imported from the U.S., as well as where companies are choosing to put their future investments, whether or not they're going to be investing more in the U.S. That is certainly something that's going to be focused on. Internally, for a lot of economies globally, but Asia, as you ask, I think there will need to be a fiscal response domestically. And so governments right now are trying to figure out how to best support their domestic economies, their consumers, ways to offset the headwinds that have come from the global tariffs. And so we expect to see more domestic fiscal stimulus in countries like China, Japan is also trying to balance a very delicate reflationary trend in its economy with and normalization of interest rates with now these new headwinds on growth. So it will be a careful balance between the external initiatives in appeasing the U.S. as well as the internal initiatives in their markets to try to offset the pressure by fiscal stimulus and things they can do domestically for the consumers.
And how concerned do you think investors are with the chance of a recession now happening in the United States this year?
I think recession probability has shot up overnight. I think, internally our firm forecasts, we started the year at about 15% recession odds. As of last week, when I talked to our strategists, we were at about 25% recession odds. And overnight, as I survey the Wall Street reports that I've gotten, recession odds are now 35, 45%, I think, across the board in what I see from the sell side. So definitely much more of a concern now going forward, given that the U.S. is a highly consumption-driven economy. About 70% of GDP is driven by domestic consumption. And so when prices are so elevated and in a such short amount of time, I think the effect on consumer purchasing power and forward confidence is going to be pretty dramatic. And so I think recession odds are definitely high. And I think that's something that's going to be an overhang on Wall Street until we get some more clarity on whether or not these tariffs are really there to stay. He said he's not negotiating, but clearly he is a negotiator, and what they're trying to do is to get the tariffs from the counterpart nations down and the trade deficit down. So to the extent that the counterparty can make progress on that, maybe there is some room to not have as negative impact on the tariff.
Grace Su from Clearbridge, thanks for coming on the show.
Thanks so much. Appreciate it.